It is Wallet Wednesday, and it's a tough time financially for so many people right now who maybe have lost their job or even taken a pay cut during this pandemic. And it may be tempting to use your credit card when times are tight. Well, joining us with more on the do's and don'ts of that, Nathan Grant with Credit Card Insider. Good morning, Nathan.
Good morning.
Good morning. So yeah, it is so tempting. So I guess we'll start with the benefits. What are the benefits of leaning on your credit right now?
Well, times like these are where credit cards can be the best friend for you or be your worst enemy, depending on how you use them. But the thing that is most important is that credit cards can provide flexibility that other forms of payment can't offer, which could be so helpful if you maybe have undergone recent changes to your income, such as job loss. We always talk about credit card rules that you absolutely don't want to break, such as missing payments, but you can kind of bend the rules a little bit with credit cards during times of crisis. So as long as you use them responsibly, they could be just as helpful as emergency savings and stuff like that in times like this, and can provide some temporary relief until you're back on your feet fully.
Yeah, and you just mentioned that, leaning on them maybe if you've lost your job or have a reduced income. I know a lot of them too have notices right now, like contact us if COVID-19 has affected you financially. I mean, literally, what should people do if they have lost their job when it
So
comes to their
the
credit
very
card?
first thing you touched on it right there. First thing you should do is contact your lenders, your credit issuers, your banks or credit unions, because everybody's doing things a little differently, but everybody's doing something. So you won't know if you don't ask. So that's like the best place to start. Then kind of reassessing your budget, maybe if your income's changed a little bit, seeing where your priorities are, and then how you can benefit the most. And then kind of an overall credit related thing to just be careful of is interest fees. Those are kind of the biggest nagging pain with finances. And, if there's a way you could maybe transfer a balance to a 0% introductory APR offer or, use a loan to consolidate some stuff, that's kind of like a good way to focus on it right now. But everybody's situation is different. So you really have to assess it from the beginning and figure out how you want to target it the best.
Yeah, you just mentioned loans, and I get those offers all the time in my email for the personal loans that are all over the place right now. So, credit cards versus a personal loan, are there advantages or disadvantages to either of those?
Yeah, personal loans, they usually have fixed rates for their interest, and the interest rates are usually lower than credit cards on average. And like I mentioned before, like if you're maybe getting overwhelmed with multiple debts, a personal loan can help you consolidate it into like a single, easier payment to pay. So that might be a good thing if you're just juggling all these due dates, and now that your income's a little shaky, you might want to have a little more consistency, and a personal loan can do that as long as you're not building more, or using those cards and building more credit on top of it. Then you're just doubling your debt. But credit cards, on the other hand, their strength in times like this, besides the flexibility, is that they can often provide rewards and cash back for regular purchases that you have to make anyway. So if you're going to be shopping at a particular retailer and you have their retail store card that gives you a discount or money back, as long as you're paying it down in full when you can, so you're not wasting those rewards money on interest. That could be a way where if you're making grocery payments, gas payments, or like I mentioned, a particular retailer, that might be a good option. But you don't want to erase the value of any rewards or have that be like the main reason you want to do it. It's mostly for the flexibility that the credit cards offer.
Yeah, yeah, and as we've seen the economy really affected by the pandemic, is it getting harder to get approved for those credit cards and those personal loans?
Yeah, I mean, like your credit scores always are the biggest factor for that, your credit history, but they have credit card options for pretty much any level of credit. So if you're starting off with no credit, if you have bad credit and you're trying to build it back up, there are options out there. And yes, the interest rates are going to be a factor in that, what you're paying over time. But for times of crisis like this, you might be able to take advantage of it by of finding the one that works for you, talking to, like I mentioned, your credit unions and stuff. Those usually have more personalized service than bigger chains, so they might be able to help find an option for you. And then the single most important thing is just make sure that you make your payments on time, because a single late payment could stay on your credit reports for up to 7 years. And if all this gets leveled out and you're back up and running, you could have those effects affect you further into the future, even when your income's back to normal and stuff. So very important just to be responsible no matter what option you're choosing with your credit card.
Yeah, I don't want that on your report for 7 years. Well, Nathan Grant with Credit Card Insider, thank you so much for those valuable tips.
No problem. Take care and stay
All right.
safe.
Yeah, you too. Have a good morning.